quite constructive on economic growth for the coming year. Um, you know, I would say a couple things. Businesses are learning to live with the macro uncertainty and tariffs. Deregulation is going to start kicking in. And importantly, fiscal spending is really picking up. So three of those point a quite constructive picture for the economy. I think the offset to that is that unemployment data has been a little bit softer here. And we expect the next Fed chair to be reasonably dovish. So we could see a steepening of the yield curve, short rates remaining low, long end of the curve could be picking up here. A lot of that's priced in, but we could see more of that going forward. So we really start with a couple of key inputs. Number one is valuation. Valuation is quite an important part of what we do. It really feeds into the expected total returns for the next year. Sometimes it's more important than others. Right now, it's quite important to us because credit spreads are reasonably tight. It's helped push us to be a little more conservative in terms of that credit risk exposure. But we also think about market fundamentals, company fundamentals. Are they improving? Are they getting worse? And then market technicals matter as well. Technicals have been quite strong because the amount of debt really hasn't been growing a lot. So that's helped to moderate a little bit our more conservative stance. Yeah, so it's quite a shock to the markets. I don't think anyone was expecting that degree of change in policy there. And we were cautious on the economy after the announcement. We were worried. We were reluctant to just dive into U.S. assets because we're worried about the outlook for corporates. But we did find some great opportunities across the globe, some areas that really had sold off a lot, but weren't really tied up into the tariff nets. As some investors, from a knee-jerk reaction, had to de-risk. We jumped in and bought those because we thought the banks were going to be unaffected. So we're able to sort of buy some dislocations that we thought were really good relative value and buy them really quickly, something that a financial advisor would be really challenged to quickly move their clients